Good morning. This is Vince Lanci, and this is the Gold Fix. It is 8:02 Eastern Time, U.S., November 6th, Election Day. I hope London survived. November 5th. Um, I did not watch Vendetta last night, but I did watch Life of Brian. So you'll forgive me if my report today is a little bit more like John Cleese and less like myself, having listened to him talk so much. Okay. Getting to the market, you could see right now on your screen, the dollar index is slightly lower, actually coming off its lows in the morning. Gold is a little bit higher. Note that the dollar was weaker yesterday and gold did nothing. It's actually lower for most of the day, but now gold is slightly higher. Silver also slightly higher, but not outperforming gold on the upside. Palladium weaker on a little bit of retracement after yesterday's strength. Platinum is up, copper is slightly higher, and the offshore yuan and onshore yuan are trading 691, slightly lower against the US dollar. That is to say, they are slightly stronger. That is important as we get into it. Again, it's not enough data points to create a trend, but if gold was lower yesterday versus a weaker dollar, and the yuan was, we'll just say, higher, and gold is now stronger against a weaker U.S. dollar, and the yuan is now lower. Which of these things doesn't belong here? And that would be the U.S. dollar. Gold is, at least for the last 48 hours, proving my thesis, or a thesis that a few people share, that gold is increasingly, the yuan is increasingly being pegged to gold. So if the yuan is stronger and the yuan is weaker, that's going to have, that pairing is mattering more and more. Dollar yen is flat. Euro is a little stronger. There's another option expiration today in that, not as big. The British pound, a little bit stronger. I'd expect that to see weakness as more and more Brexit fatigue comes out. Canadian dollar, a little changed. Aussie dollar is trading 72.40, and G20 and emerging markets are mixed. All right. Bonds, I'm sorry, that's Turkish lira. I want to say US Treasury. All right. That's a spider trust. I have no use for that. You may, but I don't. So why don't we go to today's content referencing? All right. Let's start with yesterday very quickly. If you missed it, there were two posts on gold yesterday, but the one I think that matters, not just for gold people, but for people that are watching dollar strength and how dollar strength affects U.S. stocks. Gold's role as a fear hedge returns. You can read the report in full PDF there if you missed it. It's Goldman Sachs, so make a decision whether the information is there. Just take it for what it's worth. Let's put it that way. We have CRG's November market review. That's a good read. The overnight recap, which you should have read by now. If not, shame on you. If we have time, we'll get to it. And today, all right, gold fix, elections change nothing, which is a complete contradiction to what I've been saying for the last month. Elections matter. We'll get to that right now. Okay, not many charts here to show you. Yesterday, money, as in gold. Gold was softer despite the weaker US dollar, as we implied by yesterday's gold fix title, which was no particular place to go, I think. This made little sense to us, as we have asserted for a week or so now that midterms would keep gold bid, and any weakness in the US dollar should overreact higher. But that didn't happen. So either we're wrong or it's an opportunity. We choose to think neither and wait for more information to come in. But we're leaning towards thinking that we're not so adamant on our comments before. But today is election day, so we can be wrong for one day. That makes us rethink the correlation as elections near. Also, that the yuan was higher, weaker yesterday. Okay, I already made comment about that. That it's possible that although the dollar is weaker, I think at least 40% of the DX is made up of the euro. So gold may not be focused on the euro as much, may be focused more on the yuan. So this morning at 1 a.m., 2 a.m., the buyer returned last night at midnight U.S. time again. Well, we hesitate to label this activity by our buyer as by our buyer, as demonstrated in this space many times, one has to at least acknowledge that even if it is not the same guy, liquidity does perk up in London. Once upon a time, even though London was liquid, you would have most of your spoofing done there during the actual gold fix. So I guess um, I think real order flow comes in through London now, from Asia as well as from London, and your algos probably back off until after that order flow is done. Best guess is demand out of Europe is people punting long into the election, as Brits seem to like to do. Uh, buy a little gold. Maybe Ladbrokes doesn't offer that yet. Punting into the election, or some straggling shorts covering. But note that Italian bond yields may be a trigger of some sort for weak cans to cover. Italian bond yields are a little bit higher today. Yesterday's trades, we executed no gold trades and cautioned ourselves during yesterday's call that while a signal was on our radar, it would likely be a chip that should be chopped day for momentum traders like ourselves. Thus, we stayed away. At least one member saw the ranges want to fade. Our levels were uh, below 1230 and above 1234, I think, around that area. But one of our members bought against a technical number in the 1229 area, one that we listed, but I would not. We won't take credit for that. He'll take his own credit as he should. And he took profits in the 1233 area, which is a home run on a day like yesterday. So kudos to that member. Our own trades using the system were in Facebook, which was an impatient scratch, and the euro we got long, which was a patient loss, small loss. Add after a couple dollars, add after a couple hours, I should say. Other money, that would be a facetious way of saying fiat currencies. US dollars narrowly mixed against the major currencies today, largely consolidating its recent losses. DX trading 96.30 last when I wrote this, with 95.80 seemingly seen or seemingly as major support. I am not the best typer. The CNY is lower, stronger versus US dollar, and continues to be the major currency that matters for gold, in our opinion. And we suspect it will continue to assert itself in a trading range as long as China has the US dollar reserves to do it. This we feel is no longer temporary, but a mandate to appease suppliers of oil, the IMF, and assert self sustaining Forex liquidity as a bridge between the US dollar and standing on its own, aka the petro yuan. All right. How could this backfire? Well, commenting on how this backfires, um, this backfires when the economy, right now, what they're doing is they're backing off on weakening their currency uh, for in favor of fiscal measures, lowering corporate taxes, uh, uh, doing other things that eventually stress their own people, um, but helps their markets. Gold behavior yesterday versus the weak US dollar juxtaposed with today. Variable is one. Okay, I mentioned that already. Outside markets, that will mean the markets that everyone else trades. Equities, Hong Kong was firmer and other global equities were mixed. The global 10-year bonds were all a bit softer. Uh, right, the yields were a little bit firmer, with Italy yields up 3 to 5 basis points. So I think bonds are a little bit softer for I don't know what. It just could be noise. It's just daily activity. Traders, now speaking about U.S. equities, global equities, but U.S. equities, well, traders seem to be pulling in the reins, waiting for the U.S. election results and the FOMC meeting. So that doesn't mean we won't have big moves. Just look for big moves on lighter volume. If you're trading and if you're actively trading, scale back your volume or widen your stops if you're a big player. And if you're a small player, you should go to town and have some fun because your 1 to 5 lots is not going to move the market. There should be money in it for you as long as you're uh, aware of the headlines. It's 812. Oil. The oil market, not much to say here, but something to say for people that are paying attention to it. The oil market, where prices have been under pressure lately, will get both the EIA and the API inventory today. Um, so, my personal feeling about oil, as someone who's traded it for 20 years, second market I traded was oil. Third market I traded was I was one of the first traders in natural gas options, which was incredibly boring at the time. Mm, Got very exciting in the 99 to 2002 era, and then got really boring again. But I say that because oil has been weak. Larry has been lamenting that despite the stock market rally. My comment had been just as an observation that oil is has been being liquidated by longs in an attempt to shore up their capital and stabilize their equity positions. The other thing is there have been no fundamentals, strong fundamentals to say that WTI is a buy. That said, natural gas has been strong. I didn't look closely yesterday, but I got to wonder if the weather is going to be a factor in the price of oil because of the heat crack. Uh, heating oil, uh, while we may export some, it is a domestic product. So our economy may do poorly, and oil may be sold overseas, but heating oil is used domestically. So I got to wonder if if the weather, as it is affecting, or at least a reason to affect natural gas higher, is being seen as possibly a reason to buy oil. Maybe they've already all bought their oil and now they're converting it. So that's why the season doesn't matter for oil, it matters for heating oil. So maybe the crack will just blow out. Elections don't matter after all. We've been saying elections matter, elections matter, elections matter. Well, here's why they don't matter. After thinking about it and talking with a couple people, here are our thoughts. All right, for all the bipartisan, not by what is it, polarity, for all the disparity between the parties, they agree on two things. And both of those are going to be at your expense. But editorial comment aside, they agree on two things. The GOP wants to make temporary home cuts permanent, um, and the GOP is now floating the idea of a middle class tax cut. Now, what Democrat in their right mind is going to be able to say no to that, uh, uh, even if they are for raising spending and raising taxes? So every Democrat's going to if the GOP has moved to the right, then the Democrats have moved to the center. So there is no Democrat, I think, with the courage enough to stand up for what is right or what he believes uh, to override his own desire for job security. So, having said that, the flip side of that is infrastructure, which the Democrats already wanted. So, Trump is really not a Republican. He's a New York Democrat. He's not even a New York Republican. Dems won't fight onto the text. Dems won't fight GOP tax cuts, and it's Dems cheerleading the infrastructure initiative. This policy mix, comma, which we associate with a stronger currency and of easier fiscal policy and tighter monetary policy, will remain intact. By that, we mean that QT will continue. We will issue more and more debt. We will monetize our debt to rebuild infrastructure if we are actually rebuilding infrastructure. Because when you have to keep this in mind, when you're rebuilding infrastructure, the money goes to things that are shovel ready, and shovel ready means you can start tomorrow. And the only thing that's ever really shovel ready on a moment's notice is military expenditures. That's a fact. You can look it up. If you look at the queue of what's going to get money first, it's almost always military because they're always shovel ready. And that's not a knock on them. That's just a knock on bureaucracy. Okay. Both sides also believe China is cheating. So, uh, what I think is after the election, but that won't stop stocks from rallying as GOP candidates do well. All right, a little editorial comment. To us, it really doesn't matter. And those libertarian Tea Party types remind us of the Jay and Crack Squad, Suicide Crack Squad, and Life of Brian. Those guys that come up and try and save Brian. We're here. They kill themselves. It's over. So, continue down the line towards the abattoir would be my motto towards anyone who is voting for either side. But market wise, here's what I think is going to happen. Well, let's put it this way: market wise, for the next 2 years, I don't think we get a. If the Democrats were to win everything, I don't think we get the gridlock fiscally and monetarily that I had thought before. I think we get gridlock on social issues. We will continue to spend. We will continue to have tighter interest rates. If the GOP wins everything, we just get less gridlock on social issues and steady as she goes on fiscal and monetary issues. So that doesn't mean the stock market won't rally every time a GOP candidate is doing well. And doesn't mean it shouldn't rally. It just means that uh, people are trading headlines, not fiscal reality. So my advice to you would be to trade really short term or trade really long term. Anything between 1 day and 5 years is uh, left up to the vagaries of the market. Tariff update. G20 meeting is meaningless. Here's why I say that. Trump will likely begin the process to actually impose 10% tariffs on the remaining 255 billion of goods, regardless of that meeting. And that's because I don't really think he has a meeting. I think he shakes hands, looks at the guy, really doesn't have anything to say face to face in a debate, and walks away and says he tried. As to why he threatened up, Larry talks about this a lot, and it's valid. Why does this man constantly threaten and never really follow through? Well, as to why he threatens frequently but rarely acts promptly, that is consistent with a man who isn't good at having his bluff called. So, to Larry's point, you know, uh, uh, he's not very assertive and actually doesn't want a confrontation that he can lose. But uh, coincidentally, Trump can dangle occasional carrots along the way, slowing down implementation of his ideas because the real achievable goal while threatening China is to maintain maximum pressure on NAFTA partners to toe the line. Don't have any closure with China. Keep threatening China. Don't give them an opportunity to actually call your bluff, and you'll get NAFTA. You'll get Mexico and Canada to sign on the line, finalizing, and the Senate to approve it. So the North American trade bloc is more important to us in our negotiation with China than threats. If we had the NAFTA or whatever the word is replacing it totally signed, sealed, and delivered, that would really hurt China. If you look at the world in an Orwellian fashion, from a trade point of view, it is coming down to trade blocs. There's the US trade bloc and there's the China trade bloc, and Europe is in the middle. The China trade bloc includes Asian countries as well as some South American and African countries. The North American trade bloc is all of the Americas and our attempts to push China out of countries like Venezuela, like banning their gold. We're not even going to get into Venezuela trying to repatriate their gold. What does that even mean? I personally know that they export dollars by giving generals tankers of oil to sell on the free market. Technicals, a little bit small today. Sorry, I did not resize that. I'll do it for you right now. I think the important thing, if you're an active trader, is uh, Michael Moore writing from the higher call, get long above 1238.40. All right. I have no volatility levels. I do have one. I'll share it with you. Um, so that's a good number. But if we get above 1243 and back below, look for a reversal. So looking at Michael, I would say 1238 to 1229 are his inside ranges. That's a $9 range, but our average daily range has been under $7. So look for more movement as the day goes on for whatever reason as election information comes in. Uh, I would uh, I would trade small with a tight stop, especially in gold. Gold is a type of market today where you have gaps in liquidity, like when a number comes out on bonds and bonds used to gap a point higher or lower. Think of election night 2016, and while I'm not predicting that'll happen again, be aware that you'll be butchered on your stops. Think of gold like silver today, and think of silver like, I don't know, iridium. Um, I will share one level I have today, and that is not on the monthly. On the hourly, well, we have broken out overnight, so I missed that. So we'll look at the 4 hourly and see if there's anything worth looking at there. The 4 hourly is narrowing actually. I wouldn't expect anything for next 4 hours, maybe 8 hours on a signal. Doesn't mean we can't move, but above 1237 and a half, below 1230, I will probably get a signal 4 to 8 hours from now. That's no apparent help, especially if it coincides with the elections. Please be careful out there. If you're bullish and you want to be committed, consider buying a call spread, not a naked call. And if you're bearish, consider buying a put spread or trade light with wide stops. We will look to be long today above 1238, per Michael's number and my volatility indicator, and we will be looked to be short below 1229. I completely hate the market below 1229, but it proves me wrong time and time again. Uh, Below 1229, I think we're going to get into the teens again, and we'll see how it reacts there. Have a great day. Stay with us. I'm leaving a little bit early to leave a little time. Larry starts at 8:30 with the AM roadmap, and we will discuss many things as well as how the um, uh, the repeal of I don't know. I can't even think of a joke. All right. Have a great day, and I look forward to seeing you tomorrow again.